Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Thursday, June the 23rd, 2016. My name is Doug McKay. I am the founder and head moderator of Quantum Leap Futures. Each morning we get together in these live sessions to take a look at the market, macro to micro, the structure of the market, then drill down to our trade levels, our targets, and hypotheses for the day. This is a subscription room, so if you're interested in checking us out, just send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. Each day we do this live session, then we do live trading and analysis during the course of the day. Before we get going, please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, taking a look at yesterday. Yesterday, our main hypothesis was a move down into this 77 area, and then finding responsive buyers somewhere between the 79, 75, and the 77 area, and then rotating up through into the 90s and chopping around. Hypo 2 was a move up and then sell off and a rollover and a move down to take out the naked VPOC and possibly come down and test the 74 level, maybe get a late date probe down into the 71, 69 area. It was a weird day because, I mean, it looked like, we were going to get Hypo 4 as a possibility, and Hypo 4 was a move up, chop around between, the range high from the prior day and the 92 area, and then get a late day probe up into the 96, 97 area. So actually, when we got up here, it looked like that was going to be the possibility. Then, of course, the first poll came out on the Brexit, and that dropped us down here, chopped around at the high. Then the second poll came out, and that dropped us down, and then news again dropped us down, and then we tried to rotate back up into the zipper, couldn't get above the VWAP, and then we sold off into the close. So we ended up with a pretty messy looking profile. It's not unusual with headline news. Remember that today and tomorrow, if you don't have to trade, don't put risk on the table. If you're struggling or you're new, it's going to be very volatile today, and the market will move very quickly, and it can put you underwater. If you are going to trade, make sure you have stops in place that are market order stops, so that you get taken out. You might get some slippage, but again, if you don't have to, I would suggest that you don't trade today and tomorrow. I was going to trade last night, and we had this huge gap. This is something you don't see very often. We gapped up. I love to trade the Globex gaps, you know that, and I didn't trade this because I didn't trust it. And sure enough, I was lucky I didn't, because I would have been trading back towards the 76, and I would have been underwater. Even with the fact that we had a FUBAR Mr. Sneaky tech gap, and Scott and I were talking about it in the trade room, and I said, no, everything's off the table in terms of regular setups because of the volatility and the fact that OTF was going to be trading overnight. And then they create this huge double distribution zone with this LVN that goes from 93 down into 90.70. So we've got some very defined structure overnight with some serious price rejection. You've got the LVN, and then you've got the gap, and be interesting to see how those come into play. Interesting thing is we did test into the 2102 area last night, so that really played out to Hypo 4 from yesterday, and Hypo 4 kind of played out overnight, where we came up, chopped around, then bounced up into that 96, 97 area and tested into the 2102 the 2100. So kind of got hypo 2 in the day and then hypo 4 overnight. Anyway, let's just take a step back for a minute and take a look at the macro. I always start with a candlestick chart, a monthly. I use a 9 EMA, 20 SMA. I'm looking where we are within the trend on the macro level. And I do this just to keep myself aware of the different trends in the different time frames. Good slope and good separation. Have beautiful trend for the last couple of years. Then we've gone into this sideways consolidation. We tested below the 9 and the 20 at the end of 15 and beginning of 16, but since then, in the last 4 months, we've taken it back and we've held above the 9 and the 20. So the trend is in a possible continuation pattern. And you know, I imagine if the vote goes with Remain crowd in Brexit today and tomorrow, you're probably going to see this 2134 taken out and a new all-time high put in. Going to the weekly, you can see that the trend is intact. We've got good slope, good separation. We're holding above the 9. The trend is intact on the weekly. On the daily, we've got the start of a possible continuation trend. They rolled over last week, and now this week we're getting back above, and we could get continuation. No real slope or separation yet, but we are above the 9 and the 20. On the intraday, you can see that you know, we're getting this continuation pattern and possible continuation of the trend upwards. There's a naked cross up here at 2111.50. If we get back up into the 2100s today and the market is rallying, that would be your target area. We do have a gap zone from 2109.50 down to the 2104.75. So that is a target, and the midpoint of that is somewhere around 2107.50. But the naked cross is something that I would pay attention to as a possible target at the 1150. Going to the 1 hour, you see we've got good slope and separation. We do have a FUBAR Mr. Sneaky on the 1 hour. You would have got short on this particular candle and would be in and funded, and the target for the close is down here at 92, and that's basically going down and filling in, starting to fill in that LVN that starts at 93.75. But the trend itself is strengthening. We got good slope and separation on the 1 hour. On the 30-minute, we had again FUBAR, Mr. Sneaky, technical gap. We came down. We've now closed the gap. They're holding the 9. They're bouncing. We've got good slope and separation. Trend is to the upside on the 30-minute as well. On the 15-minute, we came down, broke below the 9, tested the 20, and now we've bounced off of it, tested it again, bounced off of it. So we're getting a little bit of consolidation here, but right now they're holding, but it is weakening. And then on the 5-minute, you can see that you know, we had this FUBAR Mr. Sneaky technical gap. They closed it, and then they tried to continue, and then they rolled over. We've got the start of a downward trend, and then they took it back, and right now we're in sideways consolidation. Can't talk this morning. So right now everything is looking pretty strong to the upside, but you know, we are starting to see a little bit of weakness come in. Taking a look at the news today, of course, the big news is the Brexit, and that's going to be going all day and all night and into tomorrow. So you know, that's going to be our headline risk. We had unemployment claims expected at 271, came out at 259. It didn't really give us much of a rally off of this. I think they just baked it in. 9 o'clock, we've got Belgian NBB business climate. 9:45, we've got flash manufacturing PMI. And then 10 o'clock gives us new home sales and CV leading index, and then 10:30 natural gas storage. But again, the big one is going to be the membership vote, whether Britain remains in the European Union. Okay, take a look at the structure. So clearly we are going to gap up. We're going to have a huge gap. We've had this gap. We're actually opening up inside of a prior gap between this 97 and a quarter and 94.50. We're above the key line in the sand at the 95 and a quarter, and we don't have a lot of structure here, so we have to really look to the smaller time frames. Below the 95, I would look for them to go down and start filling the LVN from overnight and closing the gap. The range gap will be 91.50. The low of the LVN is 90.75. And then if we get below that, then we've got strong distribution in the overnight that we can take a look at. We'll probably come down and chop around in these wicks right here. We've got these selling wicks, and we're likely to come down and get stuck in this area today if we get below that 90.75 area. The main target below, of course, is going to be the microcomposite microcomposite VPOC at 2081 and a quarter. That's the this smaller time frame microcomposite that encompasses these five different little microcomposites. The last area of price acceptance before they launched was down here. The last 3 days, the most traded price, or the composite, the microcomposite VPOC, is all the way down here at 77.75. So if we don't bounce off of 81, that should be your target. That is also the value area high of this longer time frame microcomposite that runs from March 17th through to today, and its VPOC is down at the 42 level, which is in line with the composite VPOC in this undetermined fair value and this blunt area of the composite. So if we get below the 78 now, I would be looking for a move down into the 74.50 and the 73 CLVN. Anything below 73, target 71. That's going to be our key line in the sand again below us. And anything below 71, I'm looking for a bigger move down into this distribution, with the first key target being down at the 62.75 and starting to come back into this distribution. But we are opening up. So if we can hold this 95, the target above is of course going to be 0150, but I'll be targeting the overnight high at 02, and if we can break above that, the main target above is going to be the gap, the naked close gap at 2105, and then the 2106.75, which was the microcomposite VPOC for the 3 days that we tried to hold up in the 2100s before we fell back down. So take a look at the overnight session. You can see we had this gap here, and we've got this LVN, and then we've got a double distribution. These are nice to trade because where your price acceptance. We just got a VPOC shift down. The VPOC was at 97.50. It's now come down. Sorry, was at 97.75. It's now come down to 96. It could trade shift back up here before the open, but right now it's at 96. And then we've got that gap zone that starts from basically 93.75, not gap zone, LVN 93.75 down to the 90.75, and then once we get back into this distribution, we've got the HVN and where the VPOC was at earlier in the evening at 2087 as a target. I would actually be using the value area low at 2087.50 to target, but very clear target if we get back into this distribution zone, because they'll be advertising for for buyers and likely to come down to the most traded price in this distribution zone. And if we hold above the 95, look for them to slowly work their way up into the 97s again, and possibly the other side of balance that will take us up into testing the 2100 again. And then above there, you've got to push into the overnight high at 02. So let's just start moving our numbers over. Our overnight high, we've got to move all the way down here. Our daily ATR target. Daily ATR continuing to shrink. It's at 1788 off of the low of the night, and we have to use that low that is all the way down here at 7650, and our 1788, our upside ATR target, we are already above. Our daily upside target is 94 and a quarter. Sorry, 94.50. So this is we're already above our daily average true range. Not unusual because of the fact that we have headline news, and then off of the high of the night, our downside ATR target is going to be 2084 and a quarter. Just inside the value area. And then our overnight VPOC is right where we're trading at 96. Oh, I didn't mean to do it that way. All right. So we have 95 and a quarter. Below that, I'm going to be looking for them to test the 93.75, the lower part of this distribution. And then I'm going to use the 90.75 as my trade area, because that below that puts me into that lower distribution from the overnight, with the target being 87.50. I'm actually going to use the LVN at 87.75, and I'm going to use it as a trade level as well. And I'm going to encompass the LVN and the IB. I want to be below 87. Once we're below 87, I'll be looking for them to come down and test the value area high at 85.75. And then our downside ATR target. I don't think that the ATR is going to mean much today, so don't get caught up in the ATRs. We're showing them because of the fact we should, but I don't think that the market's going to respect the range today, and we should get an expanded range as the news comes out. Once inside of the value area, I'd be looking for a move back to the open and the VWAP of yesterday at 2082.50. It's also where the VPOC was just before they stole it into the close. And then below 82, I'd be targeting that 79. I'm going to use 79 and a quarter, the LVN. And then below that, I move down to the naked close that was at 77 and a quarter. And coming down and testing. The value area is just below the range low, so I'm going to use the range low itself, and then below that I'd be looking for a move down into testing the key line in the sand, which is going to be that 71 again. In fact, I'm going to move this trade area all the way down here to the 74 down to the 73. So a 4-tick. We've got the range high. Is it range high or range low? Sorry, range low at 74 from Tuesday, and then we've got the CLVN at 73. So both important levels. And then below that, it's all about moving down into the 69 area. Our key target below 69.50 and 70 and a quarter, naked close, naked VPOC, and a test through the gap. The bottom of the gap starts. The gap starts at 68. I'm sorry. Where's the gap start? Gap starts basically at 71 and down to 60, 68 and a quarter. That's the bottom of the gap. Okay, and then below that, all our key levels that have been, we've been looking at, which is basically this whole distribution area and the undetermined fair value at 61, 52.50, the key target 42 and 31.50. The Globex composite is slightly higher than basically about 10 points higher than the RTH. The RTH composite is the 42. The Globex, if you bring in the Globex volume with the RTH, your most traded price going back to the beginning of 2013 is actually 2052.50 if you want to use a full session. So those are the levels below. Above, really everything remains the same. We've got the overnight high at 2102. That's going to be our target. Our overnight low, did we put in the 76? No, we didn't put our overnight low in yet. 76.50. And we did put the overnight VPOC in. So now, if we hold above the 95 and a quarter, the target is 97. Is it 97 or 97.50? $97.50. And then 2100 naked VPOC and the centennial number. And then above that, overnight high at 02, 0350, target 05, and 0650. I'm actually going to shift that to, it's 0675, right? 0675. And then 09, 9 and a quarter, you got a naked VPOC and a naked close, and then the all-time adjusted high at 2110.75. And then above that, we're into those measured moves. The one is at 15, one at 24. We've got the weekly ATR up at 21, and then, no, is that 25? That's right. And then we've got the 34 unadjusted. all-time high. Okay, so what are our hypotheses? Well, our hypothesis is a lot of rotations. Expecting a lot of volatility, expecting this market to react to polls coming in and headline news. But our main hypothesis is an open auction out of range, a move down to test the lower distribution of the double distribution overnight. Forgot to 87 and a quarter. Did I mark that? 87.50, yes. Okay, so my main hypothesis is an open auction out of range, a move down to travel through that gap area and test the range high and the 90.75, and then between there and the 87.50, I'm looking for responsive buyers. It's really initiative buyers because it's at the upper end of the range, but because of the fact we're coming down so far, I'm calling them responsive. But I'm looking for buyers to step in between the 90.50 and the 87.50 and then try to break us up through the 91 and come. I'm expecting that we're probably going to spend a great deal of time today between the 2100 and the 87.50, and we're just going to be chopping back and forth. So my main hypothesis is, coming down, testing the levels, finding buyers, and then just coming back up here and chopping around. I do not expect the overnight low to be taken out because it's all the way down here in 76. That hypo won't kick in until we get below 85.75. So main hypo is open auction in range, outer range, I should say. Come down, test through the gap, the LVN of the double distribution, test the HVN of the lower distribution, and somewhere between there and the bottom of that area, rotate back up through and chop around up here between the 2102, 2105, and the 87.50. That's hypo 1. Hypo 2 is an open auction out of range, a move up, test the 2100, possibly take out the overnight high, but somewhere between 2100 and 2105, finding responsive sellers, and then rotating down through, chop at the range high and the 87 area, chop in here, and then get continuation, break into the value area and push through to the overnight low and the fill of the gap and the naked close down at the 77 and a quarter. So hypo 2 is a open auction outer range, a move up, failure somewhere around the 21 to 2105, and then move down, chop around in the 97 to 87.50 range, and then get the push through and the continuation wave down into the lower distribution of the profile from yesterday. Hypo 3 is a open auction outer range, come down, chop around in the 90.50 to 87.50, and then get failure and push through to the 76.50 and possibly even go down and test the 69 area with a late day probe. So kind of like the only difference between hypo 3 and hypo 2 is we don't get the push up. We come down and we just chop around in this area and then get the continuation wave. So they're kind of similar, but one has no move up on the open. It's just failure, chop, and then continuation. Hypo 4 is an open auction or open drive, and we leave the low volume area of the double distribution overnight, and we get a open drive up into the 2100s, chop around in the 2100 to 2103.50, and then get continuation and push up through and make a new all-time adjusted high and break above that 2110.75. And who knows how high we could go. So those are the four main hypotheses that I'm looking at. It's going to be rotational no matter what. So just, keep your targets small. Don't try to, get huge runners today because they could turn it on a dime and, you get all your profit back or get underwater quickly on trades. We're below the 95 now. They're coming down and testing that LVN from overnight. So it should be interesting coming into the RTH. So it looks like possibly hypo 1 is going to be in play coming into the RTH session. That's going to complete our pre-market session. I'm not going to bother with gold today because I'm not going to be trading gold. Gold is coming back towards, well, let's just take a quick look at it. Gold is as anticipated. We couldn't hold the 1300s, and we said we'd have to go and find buyers, and the main target it was 62. We've come down close to or below the 62 and tested the what was the low overnight? Where's my 59.90? But overall, I'm still anticipating coming down towards this 44, 45 to 37.60 area and coming down to the composite. Remember, this is the most traded price going all the way back to October 2008 on gold. So as we get closer, it's going to act as a stronger magnet and likely to come down that far to find buyers with enough conviction to give us another push up into the 1300s if that's where we're going to go. Right now, we're below the Keltner center line on the ES and the overnight VPOC. The 24-hour VPOC or VWAP is running at 92.75. We just bounced off of it. As long as we hold below the Keltner and below that 95, look for them to come down to that 90.75. You can see that 90.50 is the Keltner lower line. Above the 96.50, a test to the upper Keltner is going to bring us up into that 2102 and take out the overnight high. So that's going to complete our pre-market session. As always, trade well, trade safe, and I will catch you on the flip side.